Question 1. Which of the following is a key principle of insurance that ensures the policyholder is not financially better off after a loss than they were before the loss? A. Risk. B. Indemnity. C. Insurable interest. D. Hazard. Answer B. Indemnity. Explanation. The principle of indemnity ensures that an insurance policyholder is compensated for the actual financial loss suffered due to an event covered under the policy, but they are not allowed to profit from the loss. This principle helps prevent moral hazard where insured individuals might otherwise be incentivized to cause loss or damage to their property. Under indemnity, the policyholder is reimbursed for the loss up to the policy limit but cannot claim more than the actual amount of the loss. This concept is a foundational aspect of all property and casualty insurance contracts. Question 2, scenario-based. Mr. Adams has recently purchased a homeowner's insurance policy from Zeiss Insurance Company. The policy includes a 30-day grace period for premium payments. On the 25th day after the premium due date, Mr. Adams faces a financial emergency and is unable to pay the premium on time. He contacts Zeiss Insurance Company explaining his situation. What should Zeiss Insurance Company do in response to Mr. Adams' inability to pay within the 30-day grace period? A. Automatically cancel the policy and charge a late fee. B. Provide a 15-day extension for premium payment without any penalties. C. Allow the policy to lapse after the grace period ends as per policy terms. D. Reissue a new policy with higher premiums due to late payment. Answer C. Allow the policy to lapse after the grace period ends as per policy terms. Explanation. Under Maryland law, insurance policies typically include a grace period for premium payments, usually 30 days after the due date. During this time, the insured can pay the overdue premium without losing coverage. If the premium is not paid by the end of the grace period, the insurer is not obligated to continue the policy and the coverage may lapse. The insurer is not required to provide any extension beyond the grace period. The insurer must inform the policyholder about the cancellation if the premium is not received within the grace period. Question 3. Which of the following is true regarding the requirements for licensing insurance producers in Maryland? A. An insurance producer is not required to pass an exam if they are applying to sell life insurance only. B. Insurance producers must complete continuing education every 24 months to maintain their license. C. Maryland does not require a background check for insurance producers before issuing a license. D. Insurance producers must pass a written examination covering all types of insurance products they wish to sell. Answer B. Insurance producers must complete continuing education every 24 months to maintain their license. Explanation. In Maryland, insurance producers are required to complete a specified amount of continuing education, C, to renew their licenses. This requirement ensures that agents and brokers stay updated on changes in the law, industry standards, and ethical practices. The continuing education period is typically 24 months, and failure to meet this requirement can lead to non-renewal of the producer's license. Regarding the other options, producer must pass an examination for each line of insurance they wish to sell, not just life insurance. Background check is indeed required as part of the licensing process to ensure that applicants meet the legal standards for ethical and legal conduct. Producers must pass written exam covering specific insurance products, not all products at once. Question 4. Which of the following best defines the concept of insurable interest in the context of insurance contracts? A. The financial responsibility an insurer has to pay claims. B. A person's financial stake in the property or life being insured. C. The duty of the insurer to disclose all terms and conditions in policy. D. The premium amount an individual must pay to maintain insurance coverage. Answer B. A person's financial stake in the property or life being insured. Explanation. Insurable interest is a fundamental concept in insurance which requires that the policyholder must have financial interest in the property or life being insured. This means that the policyholder stands to suffer financial loss or hardship if the insured event occurs, e.g. house burning down or the death of person. Without insurable interest, an insurance contract would be considered wager, which is illegal. This requirement helps prevent moral hazards and ensures that the insurance serves its intended purpose of providing financial protection. Question 5. Under Maryland law, which of the following is true regarding the cancellation of a commercial property insurance policy? A. An insurer can cancel a policy at any time without notice if the policyholder fails to make timely premium payments. B. The insurer must provide a 45-day notice to the policyholder before cancellation due to non-payment of premiums. C. A policyholder can cancel a policy at any time, but the insurer must refund the full premium. D. A policyholder must provide written notice of cancellation, but the insurer can cancel the policy immediately for any reason. Answer. B. The insurer must provide a 45-day notice to the policyholder before cancellation due to non-payment of premiums. Explanation. Under Maryland law, insurers are required to provide advance notice to policyholders if they intend to cancel a commercial property insurance policy due to non-payment of premiums. The standard notification period is 45 days. This rule is in place to provide policyholders with sufficient time to make the payment or rectify the situation before the cancellation becomes effective. Insurance companies must also comply with other requirements related to cancellation and non-renewal, which ensures that the policyholder is treated fairly during the process. Question 6. Scenario-based. Mr. Thompson has just purchased a disability insurance policy from ABC Insurance Company. The policy includes a clause stating that he will only receive benefits after a 90-day waiting period following an illness. Mr. Thompson falls seriously ill and is unable to work for 45 days. What should Mr. Thompson do to ensure he can collect disability benefits? A. File a claim immediately, as benefits are payable for any period of incapacity. B. Wait for the 90-day waiting period to expire before filing the claim as per the terms of the policy. C. File the claim only after the full 45-day waiting period has passed. D. Immediately contact the insurer and request a waiver of the waiting period. Answer. B. Wait for the 90-day waiting period to expire before filing the claim as per the terms of the policy. Explanation. Disability insurance policies often have a waiting period, also known as an elimination period, which is the time that must elapse before benefits become payable. In this case, Mr. Thompson must wait for the full 90-day period to expire before he is eligible to receive benefits. If he files the claim prematurely, the insurer will likely deny the claim or postpone benefit payments until the waiting period is fulfilled. The 45-day period is insufficient to meet the policy's requirement, so you must wait until day 91 to start receiving benefits. Question 7. Which of the following statements best describes the purpose of the Maryland Insurance Administration MIA? A. The MIA sets insurance premiums for all types of insurance policies in Maryland. B. The MIA is responsible for regulating and enforcing Maryland's insurance laws and ensuring consumer protection. C. The MIA licenses insurance agents but not insurance companies in Maryland. D. The MIA only regulates life insurance policies and not other types of insurance products. Answer. B. The MIA is responsible for regulating and enforcing Maryland's insurance laws and ensuring consumer protection. Explanation. The Maryland Insurance Administration MIA is the primary regulatory body responsible for overseeing and enforcing the state's insurance laws. It ensures that insurers and producers operate within the legal framework established by the Maryland Insurance Code. The MIA also protects consumers by monitoring the market for unfair practices, fraud, and discriminatory practices. It plays a critical role in ensuring that the insurance market remains fair, competitive, and responsive to consumer needs, with its authority extending beyond just life insurance to include all types of insurance. Question 8. Which of the following is not a consumer protection requirement under Maryland's insurance laws? A. Insurance companies must disclose all terms and conditions of their policies clearly and accurately. B. Insurers must provide a policyholder with a summary of their insurance terms within 30 days of the policy issuance. C. Insurers must maintain a list of customer complaints and report them to the Maryland Insurance Administration annually. D. Insurance companies must automatically refund premiums to policyholders at the end of each policy year. Answer. D. Insurance companies must automatically refund premiums to policyholders at the end of each policy year. Explanation. While Maryland law mandates that insurers provide clear disclosures, summaries of terms, and report complaints to the MIA, it does not require insurance companies to automatically refund premiums at the end of each policy year. Premium refunds typically occur if a policy is cancelled or if there is an overpayment, but this is not an automatic process. The insurer's obligation to refund premiums is governed by the terms of the contract and specific circumstances such as policy cancellations or adjustments. Question 9. In Maryland, which of the following is true regarding the sale of surplus lines insurance? A. Surplus lines insurance is regulated by the Maryland Insurance Administration but does not require a license for placement. B. Surplus lines insurance can only be sold to individuals who are insured by admitted insurers in Maryland. C. Surplus lines insurance must be placed through a licensed surplus lines broker and filed with the MIA. D. Surplus lines insurance is considered illegal and cannot be sold in Maryland. Answer: C. Surplus lines insurance must be placed through a licensed surplus lines broker and filed with the MIA. Explanation: surplus lines insurance is a type of coverage that is placed with non-admitted insurers when coverage cannot be obtained from admitted insurers in Maryland. The placement of surplus lines insurance must be done through a licensed surplus lines broker. Additionally, the broker is required to file the policy with the Maryland Insurance Administration and ensure compliance with state regulations, including paying surplus lines taxes. While surplus lines insurance is not illegal, it must follow a structured process for its sale and placement. Question 10. Which of the following is a primary objective of the insurance rate filing process in Maryland? A. To ensure that insurers offer competitive premiums to consumers in the open market. B. To approve rates that are adequate, not discriminatory, and do not unfairly penalize any group of policyholders. C. To regulate the profits of insurance companies, ensuring they are financially sound. D. To allow insurers to freely set rates without needing approval from the Maryland Insurance Administration. Answer: B. To approve rates that are adequate, not discriminatory, and do not unfairly penalize any group of policyholders. Explanation: in Maryland, the primary purpose of the rate filing process is to ensure that insurance rates are adequate, i.e., sufficient to cover claims, not discriminatory, i.e., treating similar risks equally, and not excessively high, i.e., ensuring they are fair. The Maryland Insurance Administration MIA reviews these filings to ensure that insurers adhere to state regulations and provide fair and justifiable rates for consumers. The MIA does not regulate profits directly, but it ensures that rates are set based on sound actuarial principles. Insurers must file their rates for approval before they can be implemented. Question 11. Which of the following is a mandatory coverage for auto insurance in Maryland? A. Uninsured motorist coverage. B. Personal injury protection (PIP). C. Comprehensive coverage. D. Collision coverage. Answer: B. Personal injury protection (PIP). Explanation: in Maryland, personal injury protection (PIP) is a mandatory coverage for all auto insurance policies. PIP provides medical benefits for injuries sustained by the driver and passengers, regardless of who is at fault in an accident. While uninsured motorist, comprehensive and collision coverage are important options, they are not required by state law in Maryland. Question 12. What is the primary purpose of the Maryland Life and Health Insurance Guarantee Corporation? A. To provide insurance coverage to all Maryland residents. B. To protect policyholders from the insolvency of their insurer. C. To regulate the rates for life and health insurance policies. D. To ensure that all life and health insurers are licensed to do business in Maryland. Answer: B. To protect policyholders from the insolvency of their insurer. Explanation: the Maryland Life and Health Insurance Guarantee Corporation is a state fund designed to protect policyholders if their life or health insurance company becomes insolvent. It helps pay claims and cover policyholder benefits up to certain limits, ensuring that consumers do not lose their insurance coverage due to the failure of their insurer. Question 13, scenario-based. Sarah has a homeowner's insurance policy with Zai's insurance company. Severe storm damages a roof and she files claim for repairs. The insurance company determines the damage is covered but offers to pay only a portion of the repair cost due to Sarah's policy having high deductible. What should Sarah do next? A. Pay the deductible amount and accept the insurer's offer. B. Dispute the insurer's decision if she believes the deductible was not applied correctly. C. Request payout without paying the deductible amount. D. Cancel the policy and find a different insurance provider. Answer: B. Dispute the insurer's decision if she believes the deductible was not applied correctly. Explanation: if Sarah believes the deductible was not applied correctly or that she is entitled to a larger payout, she should dispute the insurer's decision. Insurance companies sometimes make errors in claims processing, and consumers have the right to appeal decisions or seek clarification. Sarah should first review her policy and, if necessary, contact her insurance company for clarification or file an appeal. Question 14. Which of the following is a characteristic of an admitted insurer in Maryland? A. It is not subject to state regulation but operates on a surplus lines basis. B. It is authorized by the Maryland Insurance Administration to do business in the state. C. It is a foreign insurer that has no licensing requirements in Maryland. D. It operates without the need for oversight from any state regulatory authority. Answer: B. It is authorized by the Maryland Insurance Administration to do business in the state. Explanation: an admitted insurer is one that has been authorized by the Maryland Insurance Administration to do business in the state. These insurers must comply with all state regulations, including filing rates, policy forms, and maintaining reserves. Admitted insurers are subject to rigorous oversight to ensure they remain solvent and able to pay claims. Non-admitted insurers or surplus lines insurers do not have this formal approval but can still operate under specific conditions. Question 15. Which of the following is not an example of an unfair claims practice under Maryland law? A. Failing to promptly acknowledge and respond to a claim. B. Misrepresenting the terms of the policy to the insured. C. Denying a claim based on technicalities without proper investigation. D. Settling a claim for less than the policyholder's actual loss with their consent. Answer: D. Settling a claim for less than the policyholder's actual loss with their consent. Explanation: under Maryland law, an insurer is prohibited from engaging in unfair claims practices such as delaying claims, misrepresenting policy terms, or denying claims without adequate investigation. However, settling claim for less than the policyholder's actual loss with their consent is not considered an unfair practice as long as the policyholder agrees to the settlement. Claims settlements often involve negotiations, and the insured's agreement is required for the settlement to be valid. Question 16. Which of the following is not required to be included in an insurance policy under Maryland's standard policy provisions for personal auto insurance? A. Coverage for medical payments. B. Coverage for property damage liability. C. Coverage for personal belongings in the car. D. Coverage for bodily injury liability. Answer: C. Coverage for personal belongings in the car. Explanation: under Maryland law, standard personal auto insurance policies include coverage for bodily injury liability, property damage liability, and medical payments. However, coverage for personal belongings in the car is not a required provision. This type of coverage may be available through additional coverage options or endorsements, but it is not typically included in the basic auto insurance policy. Question 17. Scenario-based. David purchases a life insurance policy with a $250,000 death benefit. The policy includes a provision for accelerated benefits, allowing him to access a portion of the benefit if diagnosed with a terminal illness. David is diagnosed with a terminal illness and applies for accelerated benefits. The insurer offers him $100,000 as an advance on his death benefit. What is the impact of this advance on the policy's death benefit? A. The total death benefit will be reduced by $100,000 when David passes away. B. The death benefit will remain the same and David will not need to repay the advance. C. The insurer will increase the death benefit by $100,000 when David dies. D. The death benefit will be reduced by $100,000, but David must repay the advance before his death. Answer A. The total death benefit will be reduced by $100,000 when David passes away. Explanation: when David applies for accelerated benefits, he receives an advance on his death benefit. The $100,000 he receives will be subtracted from the total death benefit of $250,000, meaning his beneficiary will only receive the remaining $150,000 upon his death. The advance is typically paid back by reducing the policy's death benefit, not requiring repayment during the policyholder's lifetime. Question 18. Which of the following is true about the Maryland health insurance marketplace? A. It allows only individuals with employer-sponsored insurance to purchase health plans. B. It provides a platform for individuals and families to compare and purchase health insurance plans. C. It requires all health insurance plans to cover only catastrophic medical expenses. D. It is only available to residents over the age of 65. Answer: B. It provides a platform for individuals and families to compare and purchase health insurance plans. Explanation: the Maryland Health Insurance Marketplace, also known as Maryland Health Connection, is a state-run platform where individuals and families can shop for and compare health insurance plans. It was created as part of the Affordable Care Act and is designed to provide access to health coverage, especially for those who are not eligible for employer-sponsored insurance. The marketplace also provides access to subsidies based on income to make coverage more affordable. Question 19. Under Maryland law, when must an insurance company provide written notice of non-renewal to the policyholder? A. At least 30 days before the policy expires. B. At least 60 days before the policy expires. C. At least 90 days before the policy expires. D. At least 120 days before the policy expires. Answer: B. At least 60 days before the policy expires. Explanation: under Maryland law, if an insurance company decides not to renew a policy, it must provide the policyholder with written notice at least 60 days before the policy's expiration date. This ensures that the policyholder has enough time to seek alternative coverage if necessary. Failure to provide the required notice could result in penalties for the insurer. Question 20. What is the primary function of a third-party administrator (EPA) in the insurance industry? A. To provide underwriting services for insurers. B. To sell insurance policies to consumers. C. To process claims and manage the administrative functions for insurers or self-insured employers. D. To adjust premiums and set insurance rates for insurers. Answer: C. To process claims and manage the administrative functions for insurers or self-insured employers. Explanation: a third-party administrator (TPA) is an entity that handles administrative tasks such as processing claims, managing benefit payments, and performing other administrative services for insurers, self-insured employers, or other organizations. TPAs do not issue insurance policies or underwrite coverage. Their role is to manage the operational aspects of insurance plans, making them essential in the insurance claims process. Question 21. What is the maximum limit for an individual's liability under the Maryland no-fault insurance law? A. $100,000. B. $250,000. C. $500,000. D. $1 million. Answer: B. $250,000. Explanation: under Maryland's no-fault insurance law, the maximum amount an individual can be held liable for bodily injury damages is $250,000 per person and $500,000 per accident. This applies to personal injury protection (PIP) coverage, which provides benefits for medical expenses, lost wages, and other accident-related expenses, regardless of who is at fault. Question 22. Which of the following is not considered a factor in determining the premium for a homeowner's insurance policy in Maryland? A. The value of the insured property. B. The age of the homeowner. C. The location of the property. D. The homeowner's claims history. Answer: B. The age of the homeowner. Explanation: homeowners insurance premiums are typically determined based on factors such as the value of the insured property, the location, e.g., risk of natural disasters, and the homeowner's claims history. The age of the homeowner is generally not considered factor in determining the premium. Question 23. Scenario-based. John's automobile insurance policy includes coverage for liability, personal injury protection, and collision. After a car accident, John files a claim for damage to his vehicle, which is covered under his collision policy. His insurer offers to pay for the repairs but deducts a portion for depreciation. Is this practice legal under Maryland law? A. Yes, because the collision policy includes depreciation. B. No, because insurance policies should cover the full cost of repairs without depreciation. C. Yes, because only new vehicles are covered for full repairs. D. No, because depreciation only applies to liability claims, not collision. Answer: B. No, because insurance policies should cover the full cost of repairs without depreciation. Explanation: under Maryland law, insurers cannot deduct depreciation when paying claims for vehicle repairs under a collision policy. This means that John's insurance company is legally required to pay for the full cost of repairing his car without subtracting depreciation, unless the policy specifically includes a depreciation clause. Question 24. Which of the following is an example of a named perils policy in Maryland? A. A homeowner's policy that covers damage from fire, theft, and windstorm. B. Homeowner's policy that covers all risks except those specifically excluded. C. Renter's policy that covers any damage to personal property regardless of cause. D. Life insurance policy that only covers death from natural causes. Answer: A. A homeowner's policy that covers damage from fire, theft, and windstorm. Explanation: named perils policy specifically lists the types of risks perils it covers, such as fire, theft, and windstorm. If peril is not named in the policy, it will not be covered. This is in contrast to an all risks or open perils policy, which provides coverage for all risks except those explicitly excluded. Question 25. In Maryland, which of the following is true about renters insurance? A. Renters insurance is optional, but landlords often require tenants to have it. B. Renters insurance is mandatory for all tenants in Maryland. C. Renters insurance only covers damage caused by natural disasters. D. Renters insurance covers only the tenant's personal belongings, but not any liability. Answer A. Renters insurance is optional, but landlords often require tenants to have it. Explanation. In Maryland, renters insurance is not mandatory by state law, but landlords often require tenants to carry renters insurance to protect both the landlord's property and the tenant's personal belongings. Renters insurance typically covers personal property and liability, including damage caused by various events such as fire, theft, and vandalism. Question 26. Scenario-based. A car owned by Marcus is stolen. His auto insurance policy includes comprehensive coverage. After reporting the theft, Marcus's insurer offers him the current market value of the car, which is significantly less than what he paid for it. Marcus believes that the car's replacement cost should be covered instead. What should Marcus do? A. Accept the offer as market value is the standard for comprehensive coverage. B. Request replacement cost coverage, which is not typically covered under comprehensive insurance. C. Dispute the insurer's offer as comprehensive insurance covers replacement costs in all cases. D. Ask for the difference between the market value and replacement cost to be paid. Answer A. Accept the offer as market value is the standard for comprehensive coverage. Explanation. Comprehensive coverage typically pays out based on the actual cash value, SEV, of the vehicle at the time of the loss, which takes into account depreciation. Unless Marcus purchased additional coverage for replacement cost, the insurer is only obligated to pay the market value, SEV, of the car, which is the amount typically covered under a standard comprehensive policy. Question 27. Under the Maryland Workers' Compensation Act, which of the following is benefit available to an employee who sustains work-related injury? A. Compensation for lost wages while recovering from work injury. B. Reimbursement for the cost of commuting to and from work. C. Lump sum payments for pain and suffering. D. Compensation for work-related injuries outside of the state. Answer A. Compensation for lost wages while recovering from a work injury. Explanation. Under the Maryland Workers' Compensation Act, employees who sustain work-related injuries are entitled to benefits that include compensation for lost wages during the recovery period, medical expenses, and rehabilitation costs. Pain and suffering or damages unrelated to medical expenses are not typically covered by workers' compensation. Additionally, benefits are generally limited to work injuries occurring within Maryland. Question 28. What is the purpose of the Maryland Insurance Administration? A. To provide insurance coverage to residents of Maryland. B. To set the premium rates for all types of insurance in Maryland. C. To regulate the insurance market and protect consumers in Maryland. D. To approve claims for insurance policies sold in Maryland. Answer C. To regulate the insurance market and protect consumers in Maryland. Explanation. The Maryland Insurance Administration (MIA) is responsible for regulating the insurance industry in the state of Maryland. Its primary mission is to protect consumers by ensuring that insurance companies operate fairly and that consumers have access to a competitive insurance market. The MIA does not set premium rates but oversees insurers to ensure they comply with state laws and regulations. Question 29. Scenario-based. After an accident, an insured driver, Terry, files a claim under her auto insurance policy. The insurance company determines that the accident was partly due to Terry's negligence. However, Terry believes the other driver was primarily at fault. What can Terry do to resolve the dispute? A. Accept the insurer's determination and pay the deductible. B. Dispute the insurer's determination and request re-evaluation of the claim. C. Sue the other driver for the full cost of the damage. D. File complaint with the state insurance commissioner. Answer B. Dispute the insurer's determination and request re-evaluation of the claim. Explanation. If Terry disagrees with the insurer's assessment of fault, she can dispute the determination and request re-evaluation. The insurer will typically review the claim, considering additional evidence or statements, and may adjust the outcome. If the dispute cannot be resolved with the insurer, Terry may choose to pursue legal action, but first she should follow the claim process and dispute resolution methods outlined in her policy. Question 30. Which of the following does not constitute a reason for an insurance company to cancel a policy in Maryland? A. Non-payment of premium. B. Fraudulent claims. C. The insured's failure to maintain driver's license. D. The insured's change of residence to another state. Answer D. The insured's change of residence to another state. Explanation: in Maryland, insurance companies cannot cancel policy simply because the insured has moved to another state. However, they can cancel policy for reasons such as non-payment of premiums, fraudulent claims, or the insured's failure to maintain valid driver's license. If the insured moves out of state, the insurer may adjust the policy or offer different coverage options rather than outright cancellation.